Let's talk about Draftkings, ticker DKNG. What's up investors and welcome back to the channel. Draftkings is a stock that I've been following since it went public last year through a reverse merger with Diamond Eagle Acquisition Corp. This stock has been on the rise since then, but has experienced a pullback in recent weeks, and I think we're beginning to see a good point to enter emerge. So today we'll be looking at what exactly Draftkings is and their market potential. We will look at the very latest news and partnerships. We will look at analyst price targets and see what Cathie thinks. Let's do some technical analysis to form a strategy and determine a good entry point. And finally, we'll check out the latest financials and projections, and I will give my conclusion on the stock. Before we get into the video, if you like the content, can I ask you to smash that like button? It literally costs nothing, but it helps me out so much. It shows me that you want to see more content like this, but it also helps the video get seen by more people by showing the YouTube algorithm that viewers like this type of content. Your likes are what helps this channel grow, so show your support for the channel and help me get to 200 likes. Subscribe to the channel if you're new and hit the bell notification so you never miss a video with the potential to make you money. Again, this is 100% free and it's another great way to show your support for the channel. Make sure you watch the entire video and don't enter into any stock blindly without viewing all the information on offer. What do you think of Draftkings and what do you consider to be a fair value for this stock? What are your price targets? For 6 months, for the end of year, for 5 years? Leave a comment down below, I want to know what you think. I want to point out that I'm not a financial advisor, this is not financial advice, and I have no affiliation with Draftkings. Now let's get into it. Draftkings is a leading daily fantasy sports contest and sports betting operator. Draftkings was founded in Boston in 2012 by Jason Robbins, Matthew Kalish, and Paul Lieberman, who hold the roles of CEO, CRO, and COO respectively. Since the first daily fantasy sports platform launched in 2012, Draftkings has grown and grown fast. Now it offers an immersive sports entertainment experience across 15 distinct sports categories in 8 countries. In August 2018, they launched Draftkings Sportsbook, the first legal mobile and online sports betting platform to launch in New Jersey, the first state outside of Nevada to pass sports betting legalization. Draftkings Sportsbook now operates in a number of US states, allowing players to engage in betting on major US and international sports. In April 2020, Draftkings went public through a business combination with Diamond Eagle Acquisition SPAC, and Draftkings is the only US-based vertically integrated sports betting operator, powering sports and gaming entertainment for 50+ operators across more than 15 regulated US and global markets. Draftkings is the most recognized and preferred app across its 3 sectors: daily fantasy sports, online sports betting, and iGaming. They are the market leader in both OSB and iGaming, operating in more states than any other sports betting provider. They have established many key relationships across sports and entertainment with various major organizations, which is constantly expanding, and we'll talk more about that in a moment. Draftkings is still in its early growth stage and they are implementing this 5-year plan, as we can see here, which shows the level of promotion needed to bring in new customers, and the expected gross profit margins across states due to scale and integration. We'll talk more about this when we look at the recent financials that were released on the 7th. As online sports betting becomes legalized in more and more states, the market for Draftkings will become much greater, and Draftkings are in the perfect position to capitalize on this. When looking at sports betting companies in Europe, the UK and Ireland, such as Paddy Power, Betfair or Bet365, we can see the potential for opportunities in the US market for Draftkings. As I mentioned a moment ago, Draftkings has several partnerships, and these include: on April 15th, Draftkings announced that they became the official sports betting partner of the NFL and extended its current relationship as the exclusive official daily fantasy partner. This gives Draftkings the right to integrate several sports betting content directly into NFL media properties, and they can use the NFL's official league data feed, as well as renewing their previous exclusive relationship. On April 14th, the PGA Tour and Draftkings expand relationship with Arizona Market Access and plans for a one-of-a-kind retail sports book at TPC Scottsdale. And there's an expansion of their existing commercial relationship. Also back in March, Draftkings becomes the UFC's first official exclusive sportsbook and daily fantasy partner in the US and Canada. The company will now be able to offer in-game promotions, activations, in-broadcast odds, integrations, and UFC branding across its daily fantasy and betting products, and will possess rights to use official UFC marks and logos. They also signed a historic new deal with the WWE and most recently completed a distribution and content relationship with Meadowlark Media. As well as these partnerships, they've also made key acquisitions as part of this strategy, such as Blue Ribbon Software in April and Vegas Sports Information Network in March. These acquisitions will enable DraftKings to further build out its content capabilities and be able to enhance the customer experience across its various products offerings. Now, let's move on to the Q1 financial results and highlights that were released on May 7th. So DraftKings reports the first quarter revenue of $312 million, an increase of 253% compared to the $89 million during the same period in 2020. This is an outstanding start to 2021, and the company's CFO added, "Our $312 million first quarter revenue, 114% increase in MUPs and 48% growth in ARP MUP reflect solid customer acquisition and retention, as well as successful launches of mobile sports betting and iGaming in new states. We are raising our revenue outlook for 2021 due to the performance of our core business in the first quarter and our expectation for continued heavy growth." In other words, they've bet even their own expectations, and so they've raised the bar for future expectations. Monthly unique players has increased 114% compared to the same period last year, and on average 1.5 million monthly unique players engaged with DraftKings each month during the first quarter. This increase reflects strong unique player retention and acquisition across daily fantasy sports, online sports betting, and iGaming. The average revenue was $61 in the first quarter, which again represents an increase against the same quarter last year. So they've raised their 2021 revenue guidance from $900 million to $1 billion to a range of $1.05 to $1.15 billion. The increase reflects solid performance in the first quarter. And on the non-financial highlights, in the first quarter of 2021, DraftKings launched mobile sports betting and iGaming in Michigan and mobile sports betting in Virginia. DraftKings is live with online sports betting in 12 states that collectively represent 25% of the US population, and DraftKings is live with iGaming in 4 states representing about 10% of the population. In 2021, 25 states have introduced legislation to legalize mobile sports betting. 5 states have introduced legalization to expand their existing sports wagering framework, and 1 state has introduced legalization of sports betting limited to retail locations. In addition, 4 states have introduced iGaming legislation and 3 states have introduced online poker legislation. Overall, this is fantastic for DraftKings. As more and more states legalize gambling, the market gets bigger and bigger. So looking here at the balance sheet, as at the 31st of March 2021, we can see assets of $4.5 billion compared to liabilities of $2.2 billion, giving us a ratio of 2 to 1, and this is very healthy. When we compare the current assets to current liabilities, that's $3.2 billion to $600 million, or a ratio just greater than 5 to 1. And it's also good to see that a large portion of this is cash or cash equivalents at $2.8 billion. It's always very important for these early stage growth companies that are still making significant losses to have plenty of cash on hand. With regards to the liabilities, the largest of these is convertible notes of $1.2 billion. So there's nothing to worry about here on the balance sheet. With regards to the income statement, we can see here that the revenue of $312 million, which is a huge increase on the same period from 2020. But we can see that the company has incurred huge sales and marketing, product and technology, and general administrative costs. Overall, this leaves the company with a $325 million operating loss. There is also a loss on the remeasurement of warrant liabilities, and overall there is a net loss of $346 million, which gives a huge negative EPS of 87 cents. So with losses like these, you can see why it's important for the company to have plenty of cash on hand. But it must be remembered that this is a growth stage company, and a lot of these costs have been incurred on technology development, sales and marketing. And as we can see, this is having an effect on the revenue, as shown by growth of over 200% in 12 months, and guidance suggests that this will increase significantly again next year. For anyone who does not quite follow this information, check out their investors Q1 results presentation on the Draftkings Investor Relations website. Now let's look at what the analysts think about Draftkings. So when we look here at tip ranks, we can see that there's 23 analysts offering 12-month price targets in the last 3 months. The average price target is $72 with a high of 105 and a low of 50. This average represents a 50% increase from the last price of $48.42. And looking here at Market Beat, we can see that the most recent of these was a buy rating issued on Friday last week with a price target of $80 from Cannonball Research. Also, Guggenheim and Needham issued buy ratings last week too, with price targets of $75 and $81 respectively. Compared with the current price, there is the opportunity here for explosive upside growth. Even Simply Wall Street shows Draftkings as being undervalued by nearly 10%. We can also see here from the ownership breakdown that only 30% of the company is owned by the general public, with insiders holding 10% and institutions holding 54%. All of this is very positive. Now, when we look at the recent insider trading, we can see that there's been a lot of shares sold, but this is nothing to worry about. Look at the dates here. A lot of this is venture capitalist companies who sold shares once Draftkings went public. It's standard practice. In fact, these shares would have been worth much more at any time in the past 3 months up to Friday. I think this is a great time to get into the stock. Then looking at the top 25 shareholders, which own 50% of the company, we can see that major institutions such as the Vanguard Group, Blackrock and ARK Invest have large positions in Draftkings. One opinion that matters more than most over the past year or two has been in the opinion of Cathie at ARK Invest. And as we can see here, as of the 30th of April 21, Draftkings is the largest SPAC holding in the ARK Invest portfolios. I came across this on Reddit, so shout out to Toko92 for uploading this. I'll put a link in the description. I also subscribe to ARK and get alerts on what they buy and sell. ARK have been adding to the Draftkings position as recently as this week, with 450,000 shares and 360,000 shares on both the 6th and 7th of May. So Cathie Wood clearly believes in this stock. Looking here at TradingView, we can see that the stock has been moving in this upward channel for several months, hitting the line of support and resistance on several occasions before eventually breaking downwards at the end of March, at which point this line of support becomes resistance, and we've been moving in the downward channel ever since. As we can see here, over April and May we've been moving in this channel with a high level of volatility, once again hitting these levels of support and resistance on numerous occasions. Also worth noting here is the RSI is currently 27, which gives a buy indication as the stock is undersold. The only thing that does concern me is that on Friday we broke below this line of support, so it could potentially drop a bit further, or we could see a massive upward movement when the markets reopen. I'm going to talk about this in my conclusion, so stick around till the end. So guys, that brings us to the end of the video. Before I give you my final thoughts on Draftkings, what is your price target? Leave a comment down below, I'm interested to hear what you think. I hope you enjoyed this content, drop it a like if you did, it really helps the video get out to more people. If you've watched all the way through, then fair play. I hope I've shared some information with you that you weren't already aware of, and I hope you found value in this video. If you're new to the channel, hit that subscribe button and bell notification. So what do I think? The first thing I want to say is that I really like Draftkings. The potential in this market is absolutely huge. I live in Ireland, where all types of gambling, online sports betting and online casinos are 100% legal. And there's a small group of market leading companies making insane revenues in this industry, such as Paddy Power and Bet365. When gambling becomes legalized in all US states, then whoever the market leader is at that point in time will have the opportunity to capitalize on what will potentially be the world's biggest market. Draftkings are putting all the deals and partnerships in place now to be that company. From a stock buying point of view, it's hard to determine the bottom when a stock has fallen so much over the past few weeks. Then there's the fact that on Friday this broke below the line of support and finished the day before that level. However, I think this was a major overreaction by investors to what can be seen as... The company posted massive revenue increases, but I feel that the significant net loss is what worried investors. However, this is common for a growing company, and as long as they have cash on hand, usually these companies are fine. In this case, as we've seen, Draftkings has a significant amount of cash available, so I'm not worried about their losses. I think this is a very good opportunity to buy into the stock, but in this situation, I would not make my full investment at this point. If the stock is to fall lower, I would see it as an opportunity to average down. As always guys, this is just my opinion. If anyone is thinking about buying into the stock, I encourage you to do your own research. As I said before, I'm not a financial advisor, this is not financial advice, and should be viewed for entertainment purposes only. Thanks for watching the video. What are your thoughts on the future of Draftkings? And what are your price targets? Catch you in the next one.